everyone, I'm Gurleen. I hope you're all doing well. Once again, the consolidation goes on, and in today's video, we'll take a quick overview of the markets and we'll also discuss the trading plan for the monthly expiry that is on May 25th, 2023 for Nifty and Bank Nifty. We'll also discuss a few select stocks which must be on your watch list for good risk to reward opportunities. So be sure to stick around till the end of the video and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. So without any further ado, let's dive in by looking at the technical perspective of Nifty 50 on the daily time frame. So as we discussed in the last video, you can see an overhead supply zone around the level of 18,444, which happens to be a very strong hurdle for the index. Now you can also observe how Nifty has been consolidating in a range and is forming long upper wicks for the last two trading sessions. Now, one thing to remember about any candlestick pattern is that it holds relevance only at key areas of support or resistance. So over here you can see the resistance zone and along with it the long upper wicks, which are simply suggesting the failure of the price to break through the zone and the presence of aggressive sellers at the highs. In today's trading session, Nifty has closed right at the support level of 18,282, and as we discussed yesterday that this level of 18,282 is a make or break level for the index. So in case of a breakdown, the possibility of testing the 20 and 40 EMA on the daily chart would open up. Also, positional longs should only be considered as and when Nifty breaks above the overhead resistance zone. Well, on the hourly time frame, as we discussed in yesterday's trading plan, that after the harmonic reversal, it's possible for the index to drop down towards the levels of 18,282, and if we see any reversal candlestick pattern even on the 15 minutes time frame, we can look for a scalping opportunity on the long side. So here you can see a long lower wick candlestick, which is popularly known as a hanging man, at the support level of 18,282, which depicts the presence of buyers, and the price recovered and achieved the targets on the higher side towards the levels of 18,350 followed by 18,375. So now let's see how you can plan your trades for the monthly expiry. So here you can see that we have another harmonic pattern waiting to get triggered. So how will you get to know whether the pattern is active or not? Well, it's simple. If Nifty breaks below this pivot B at the level of 18,270, then it will bring in a possible shorting opportunity towards the targets of about 18,182 to begin with, followed by point D, which is placed at the levels of 18,102. Now, if this pattern gets triggered, I will be considering an invalidation level of about 18,395. Well, on the flip side, if you are looking to build positional longs, you should probably wait for the overhead supply to get broken out first, which would bring in a more favorable setup for longs. Now let's talk about the support and resistance levels for Nifty. So the support is placed at 18,182 followed by 18,102, and the resistance is placed at 18,348 followed by 18,450. Do remember that it's the monthly expiry tomorrow, so expect the volatility to remain elevated. Let's take a look at Bank Nifty on the daily time frame first, and then we'll move ahead with discussing the trading plan for tomorrow. So here you can see that Bank Nifty has been consolidating near the all-time high levels for some time and is trading in a narrow range of 43,440 to 44,150. Now on the chart, if you observe closely, the level of 43,440 is the lower end of the range that we just discussed, and it is also an important level of support. Now below this support level, Bank Nifty might catch onto an aggressive bearish trend. Now in today's trading session, you can see that Bank Nifty closed at almost the lows of the day after it tried to move on the higher side, but it faced supply pressure, which can be clearly seen through the long upper wick. So the bottom line is that the level of 43,440, which is the lower end of the range, happens to be a make or break level for Bank Nifty on the higher time frame, and until and unless the range is broken, expect Bank Nifty to consolidate over here itself with the volatility remaining elevated. With that being said, let's discuss the intraday trading approach. So first of all, yesterday we discussed that if Bank Nifty breaks below the level of 43,870, a target towards the levels of 43,665 can be achieved. So here you can see that the setup played out very well. Now on the hourly chart, you can also observe the supply pressure that has been coming in from near this zone, that is the all-time high levels itself. So till the time Bank Nifty is trading below this zone, it looks like a sell on rise setup. Now here if you see, Bank Nifty has broken down a major support level of 43,665. So if Bank Nifty opens gap down or flat and the down move persists, then a downward target of about 43,540 to 43,440 can be looked at. Also, in case of an extended down move, you can keep an eye at the level of 43,372, and also long should only be placed above the zone of 44,095 to 44,150. Now do remember to stick to your trading plan and only trade as and when the setup unfolds. Now let's talk about the major support and resistance levels for Bank Nifty. So the support is placed at 43,440 followed by 43,115, whereas the resistance is placed at 43,940 followed by 44,150. Now let's move to stocks, starting with Hindalco. Now on the daily chart, you can see that the stock has broken down a major support level of 418.35, and here you can also see how the stock has been consolidating in a narrow range. Now you can observe that it is an inside bar setup, so it must be on your watch list for a probable trading opportunity on either side. Now here, if Hindalco breaks the low of 403, a probable downside target of about 390 can be expected at this counter, and if the setup gets triggered, that is if the stock goes below the level of 403, then in that case I will be considering an invalidation level of about 417. Now in this counter, the bias is on the downside, but as it is an inside bar setup, long bets should only be considered if at all the stock crosses the level of 420. Let's talk about DCB Bank. So on the daily chart, you can see that the stock is consolidating in a downward sloping range and is also well placed above the key moving averages. So one can keep this one on the watch list as well for a long side breakout trade. Now if the stock breaks above this resistance level of about 116.50, so a long trading opportunity can be looked at with an invalidation level of this low that happens to be 112.50, and once the setup gets triggered, you can consider a target of about 120 to begin with, followed by 124. Well, that's it for the day, and I hope you found the video informative. So make sure to give it a thumbs up and do subscribe to my channel. If you have any queries or questions, feel free to drop them in the comments down below. And on that note, it's Gurleen signing off. Until we meet again, have a good time.